Last weekly summary before we summarize the year, and if there were 5 things that dominated the market this week, they were the following. The PC on Friday, the Fed's preferred inflation gauge. It was the SEC that keeps meeting companies around the spot Bitcoin ETF. It was China that's cracking down on their gaming industry. It was the zero-to-date expirations that crashed the market. It didn't crash the market, but made the market fall on Wednesday. And there was the Houthis on the Red Sea that is preventing ships going into the Suez Canal and diverting their routes to a different route around Africa, which is increasing the price of everything. Are you ready to summarize the week with not only these 5 pieces of information, but a lot more? If you are, let's go. Hello everyone and welcome back to the channel. If you're new, I'm Micha Stocks. I bring you the weekly summary every week and trying to keep you updated on everything that's going on the markets themselves. And of course, if you're new, then you should join us. You can subscribe to the channel. It's called Stock Talk with Micha Stocks, where you can click the subscribe button, and then if you turn notifications on, you'll get notified every week when I upload a new video. Maybe next year, maybe 2024, I'll start uploading more videos. Write in the comments below if you would prefer me to add more and more videos during the week. Let's start as usual with our weekly summary, going over the major averages. So the Russell had a great week, another great week, up another 2.2%. The Nasdaq is up almost 1%. The S&P is up almost 1%, 0.75, and the Dow Jones up 0.22. It would actually go up higher unless Nike wouldn't perform really poorly this week after their earnings results. When we look at the different indices, we can see that communication services is up 2.2%. Then we have the energy. These are the XLC and the XLE. Energy up 0.8%. We talked about the Houthis, which made the crude oil go up, and also the LNG, the liquid natural gas. And on the flip side, we see utilities still can't find a good bid, although there are rumors of rate cuts. Still, utilities is underperforming. When we look at our heat map, this is how it looks like for the week. You can see that except Apple, which had bad news this week, we're going to cover that in a second. Most of the major companies, or the big companies, are up. You can see them here, the Magnificent Seven. Google up 6.7%. Meta is up 5.5%. That's why we saw communications, of course, outperforming. Amazon and Microsoft outperforming. All the rest not really performing as they should. We talked about the SEC. We talked about Bitcoin. Bitcoin, again, is trying to hit that 45,000, maybe breach that, up another 2.6%, and Ethereum is up 3.4%. Everyone is waiting for the spot ETF to be approved. And when we look at the different indices themselves, you can see that most of them are currently overbought. Some are extreme overbought, mainly the smaller side, the Russell and the mid caps. But now that we are at the end of the year with the FOMO, with the chasing, we might stay overbought for a few more days up until everything cools down. We enter 2024, and then we'll probably get some kind of a pullback that bears are actually hoping for to save themselves. Let's start with the news itself. PC came Friday better than expected. The Fed's preferred inflation gauge is showing that inflation is falling like a rock and supports a rate cut. The market currently is forecasting March as the first rate cut. That might be a bit optimistic, unless January and February we're going to see the CPI and the PC keep falling, and then of course the Fed will not have any mandate to keep the rate so high, and they'll start alleviate the pressure from businesses. We talked about the SEC, we talked about Bitcoin. How do we know that we're getting close? The number of meetings, the different topics of discussion during these meetings, etc. All these things are hopefully bringing us closer to the approval of a new spot Bitcoin ETF. And actually, there will probably be several, around 8 different companies. I don't see the SEC preferring one over the other. The SEC, of course, is the Security and Exchange Commission. We talked about China. That was one of our 5 things that moved the market. President Xi decides to crack down on online gaming because he thinks that the Chinese youth, teenagers and others, are playing too much games instead of learning math and physics. And 0 day to expiration. So I'll explain what you see here and why is it so important. Between 40 to 50% of options trading currently in the stock market is being done in 0 date to expiration flow. What it means is that traders are trading short-term options for the same day. It creates volatility. It's mainly gambling on one side or the other. But when they start piling in on one side, they can create a correction just like we saw on Wednesday. On Wednesday, you can see here on the left-hand side, the SPY was around 475, 474, and dropped to 469. Very, very quickly, it happened 2:30 p.m. Eastern time. What they did is they opened a lot of short-dated put options that created or reacted, or the dealers needed to react by selling the SPY, which of course created that downfall. We saw the correction coming on Thursday, back up, but these things are now dominating the options market, and when they decide to go one way, they can move the market, as we have seen. Does that mean that the market will crash because of this? No, but it is a phenomenon that we need to be aware of, and it might even increase during 2024. We will see. And we talked about the Houthis. So shipping in the Red Sea is grinding a halt because oil tankers and other shippers are not going. I think most of the biggest shipping companies in the world stopped going through the Red Sea and the Suez Canal, and they are now going through Africa. It automatically increases price, going back to inflation. The Americas and 20 other countries have decided to create a task force to secure these routes again. We will see in the next few days how that will work out. And President Xi, or actually Ken Dilanian from NBC, exclusively says that President Xi warned Biden during the summit a few weeks ago that Beijing will reunify Taiwan with China. He keeps saying that, and I hope the West is getting ready for it. I know Apple is diverting a lot of their manufacturing from China from Taiwan, to India. Other companies as well. Let's not call that a surprise if we see China invading Taiwan eventually. Will it happen in 2024? I don't know. Your guess is as good as mine. GDP Q4 keeps going up. Now we're at 2.3%. This adds to around 5% on Q3. If there is going to be a recession in 2024, we currently do not see it in the GDP. We might see it in the credit, we might see it in the consumer, but we don't see it yet, not even close to that. Berkshire Hathaway keeps creating the floor for Oxy. Every time Oxy stock gets to around $60 to $70 a share, they keep buying. Now they already own 28% of Occidental Petroleum. They might take it private eventually or keep it in the stock market. I don't know. What I do know is they keep accumulating. Maybe they know something on the oil prices that we don't, because Oxy stock doesn't look like a stock that keeps going up. If Warren Buffett and Berkshire Hathaway wouldn't create the floor for that stock, it would go down. So maybe they know something we don't. And of course, someone that didn't read the market as they should were the short sellers in 2023. Short sellers came in with thought that they should short Tesla and Nvidia and Apple and Meta and Microsoft and Coinbase and Broadcom and Palo Alto and Alphabet and AMD, Carvana and others, and you can see how much money they lost. Another horrific year for the short sellers, which proves again that short selling just goes against the phenomena of a market, at least in 2023. What will happen in 2024? Only God knows. Warner Brothers and Paramount are in discussion after we cut the cables. Now they want to put them back together. Both companies are struggling to compete with Netflix, and now they're teaming up, or they're trying to team up. We probably in the next few days we will hear if those negotiations came to fruition and they're merging or not. Apple is ramping up their Vision Pro production, aiming launch around February. It's going to be probably their first version, a very expensive version, but it will be their stake in the ground saying we want to be in the augmented reality world. That was good news for this week. We will get to the bad news for Apple in a few minutes. Bird files for bankruptcy. If you invested $10,000 in their IPO, you would now have $4. Bird, the electric scooter company, just went belly up. And Mark Zuckerberg keeps selling Facebook shares. He now sold over $320 million of shares. And we know that he's building an underground bunker in a new house in Hawaii for around $100 million. A lot of billionaires are right now. It's kind of their thing of buying nuclear bunkers. Maybe they know something that we know. Mark Zuckerberg for sure has a lot of information that we don't know. Should we follow the money and be afraid? I don't know. Write me in the comments if you're taking Zuckerberg's action and you're acting as well. And you can see Lance Roberts identifying for us that money is flowing into the markets. We know that. We're getting to low levels of cash. Everyone is buying right now. Usually it's a sell signal, but because we're doing that in the end of the year, when flows are coming, do the chasing, and of course, end of year, we might still be overbought for a few more weeks. Eric Balanchunas from Bloomberg shows the same phenomena, but in numbers, you can see the year-to-date, $50 billion were piled in to the S&P 500, SPY, and VU. And Apple, the bad news for this week, loses a patent lawsuit and took down, as of Friday, the new watches, the new Apple Watches and the Ultra 2, because they're infringing a patent, and now they need or to reshape the algorithm or stop selling these watches. If it keeps going, this is, of course, will impact their top line, their revenue, and their bottom line. I think, if I'm not mistaken, around Christmas they need to stop also selling it in the stores themselves in physical locations, and resellers can sell it until their inventory is done. That's, I think, the what the court decided, but we'll see. They might change the algorithm, send an over-the-air update, and that's it, and they can keep selling. We'll see it in the next few days. Affirm gets a new partnership with Walmart, and Affirm stock is skyrocketing these days. This is just one day when they popped 15%, but they went up dramatic this year. And Nikola founder Trevor Milton, which was in charge of taking a video of an electric truck down the hill and presenting it as if that truck was driving a regular road, it lost his trial and his sentence for 4 years for fraud against investors. So don't fraud investors. And NIO, the Chinese EV, gets a $2.2 billion cash boost from Abu Dhabi, and also their CEO on a live stream shows that one of their cars was able to drive 1,000 kilometers, which is over 600 miles without charging, which is an amazing achievement. Of course, the car was with a lot of batteries inside, etc., but it's still an amazing achievement and will push the EV or the distance fear that exists away from people's mind, and hope they will buy more EVs. Adobe and Figma call off their merger, $20 billion. Adobe got to a point where they understand that the hurdles are too high, and it's better to pay $1 billion in calling off the merger rather than keep on fighting. And last but not least, more Americans than ever own stocks. Wall Street Journal shows this chart, which again shows that the wealth of the American people, because of the S&P going up, and whether it's a chicken and egg, it depends on you, because a lot of households, almost 60%, are now invested in stocks, mainly, of course, the SPY, mainly, of course, through their retirement accounts. keeps pushing money inside the stock market. And again, it goes back to the comment around short sellers. If money keeps flowing to the market, then the market on the long term has a tendency to keep going up. It's just plain math. There's nothing more than that. If you keep piling money into the markets will keep going up. That's where the money goes to where it's best treated. And where it's best treated is a place where we see gains above 20% this year. Huge gain. Okay, next week. First of all, Monday, no trading. So you have another day off. Monday, nothing's going to happen. Tuesday, Wednesday, Thursday, Friday, and the Tuesday, Wednesday, the week after, you see the red rectangulars here on the calendar. This is a time that is called Santa Claus rally time. Historically, 79.5% since 1950 to 2022, 79.5% of those times, these 5 days prior to 5 trading days prior to end of the year and 2 trading days into January, are considered bullish. Actually, they're the most bullish. It's a time that is statistically the most bullish of them all. How bullish? The average return, if you invest before those 5 days, is 1.32%. If you say, okay, I missed it, what is left? The S&P went up 0.2% on Friday, so you have still another 1.1% for the next few days. Will it happen again in this Santa Claus rally? We will see at the end of it, not before of that. So remember, 5 last trading days of the year, 2 beginning trading days of the year ahead. By the way, there are reasons for that. One is window shopping. Every investor that manages money wants to show that he's in the best performing stocks. Automatically they go up. Second is performance chasing. Everyone wants an end of year bonus, and in order to get that bonus they need to chase, so they buy more stocks. That's the end of the year. And beginning of the year, there is amount of money that goes in at the beginning of the year to buy at the beginning of the year to enjoy the whole growth of the year, and that's why we see the 2 first trading days. Will it happen again? I don't know. What I do know is we will follow it here. You want to see companies reporting this week? Here you go. Nothing. No companies reporting this week. Again, short week and end of the year. Some companies are actually, even in a holiday, they're not even coming into the office. We don't have really a lot of economic calendar news. We might get, as usual, every Thursday, continuous jobless claims and initial jobless, the regular job claims, and the PMI on Friday. And now let's go back to the S&P 500. And I want to show you something very interesting that's important to every investor to remember. When you own the S&P 500, there are 2 ways of owning it. One is putting the dividends back invested in the S&P 500, and the other is not to. When you look at, currently we ended Friday at 473.65. That's on the SPY. On the S&P, it's 4,700. You can see that the peak on January 2022 was around 4,800. Okay, this is the closing. It was higher when you look at during the day. So 4,800 was the peak. That's when you don't invest back the dividends. It's not a lot of dividends, but if you don't invest back the dividends that the SPY provides you, you are still not achieving a breakthrough, right? You're still under the price. But I'll go down here and adjust it with the dividends. You can see that while we adjusted with the dividends, we are at a new all-time high for the SPY. And that is why a long-term investor with growing the wealth, and again, I'm not a financial advisor, and nothing I've said so far is financial advice, but I'm just mentioning the math here. If you reinvest your dividends in a timely manner, when you get them, your reinvestment, you will get better results, better outcomes. Why? Just because it's math. You buy more stocks, and if you buy more stocks and it goes up, you enjoy it more. Now let's go back and see where the S&P currently is trading. So the S&P is currently trading around 47.30. If we add the 50-day moving average, just to make it a short term, you can see that we're very stretched. But again, we're now at a period where money is piling in. There's less volume. So we might see reasons of corrections. You can see that this is Wednesday, what we talked about, that drop in 0 day to expiration. And then Thursday, we already got a green day. And Friday, we already got a green day, but we're still struggling around the 4,700. We might see a pullback around 46 and then a push above, or we'll just see the push above. I don't see us getting a huge correction during this week, but you never know what the market folds for us. So just be careful out there. But remember that we're in the most bullish period in the year, and I wouldn't try to short a dull market. I really hope you enjoyed this weekly summary. It's the last weekly summary before we do a yearly summary next weekend. If you enjoyed, you can smash that like button. Micha Stocks. I will see you next week on our yearly 2023 summary and a preparation to 2024. Till next time, bye-bye.